All right, and we're back. Real Assets Weekly, episode 12. Today is Friday. It's August 11th, and it's a beautiful day. With me again, Ryan Cobb, our man down there in South Texas. How are you?
I'm doing good, man. Turtle, you're starting to cut into my Landman Saturdays here a little bit, man. I should be playing golf by now.
That's right. That's right. I know. Yeah, seriously, man.
I'm
You're
just
on.
kidding. I'm just kidding.
No,
I'll
no.
be working all weekend. That's all I do.
Yeah, yeah. I feel you, man. I feel you. Yeah. So with that, our esteemed landman colleague down there, the people got to be, um, pretty excited. I don't know what's about all this down in the energy patch. I mean, we've definitely, especially on a relative basis, seen some strength in energy markets, in resource prices, and not just oil, but also natural gas as well. You
Sure.
maybe we'll just jump into it. You sent some charts over. I'll pull up the second chart you sent over before we.
Yeah, that's just the September NYMEX contract for crude
Okay, or
oil.
not that one here. Yeah, go ahead. I'll pull that up while you talk.
Yeah.
So
Um,
what's going on over there? Things
you
are
know,
looking.
I'm not gonna get too deep into my thought processes on what's happening here. Other than that, historically, this is a kind of a strong time of the year for crude oil because of demand. I think last time we touched a little bit on how the DOE's been reporting gasoline demand, whereas like Valero has kind of contradicted them, saying that they're seeing a really robust gasoline demand. Um, so typically, you get driving season this time of year. You get uh, people taking vacation cars on the road, so you get a lot of the distillate and gasoline stocks start drawing down, which in turn helps crude prices, right? Because, you know, when gasoline stocks are low, then crude stocks need to be being replenished in their major pad sites in order to, then be sent to the refineries. So you do traditionally see some strength this time of year, but I've been kind of waiting. We've been in this falling wedge pattern, and that's why I shared this chart with you since making that big blow off top. And I was kind of looking at this channel, waiting to see it break out, and at least on the September contract, um, it sure is it sure as hell looks like it's starting to maybe make its move here. It's clearly outside the trend, outside the channel trend, and it's kind of gathering momentum to sort of test some key areas up around 85 to 90. So we need to watch here and see. You know, this is NYMEX. Like right now, USO is a decent proxy, just because we're still mostly in backwardation here on the curve. Like I'm looking at prices going out. We're at CLU3, which is September, and then you look all the way to CLU4 September of 2024. Crude's all the way down at $76 there, and it's at 83 today on NYMEX. So that strong backwardation is the market's signal to producers to produce more, because um, they want inventory now. Whereas contango is the opposite. It's like prices are higher in the future. We don't need it right now. And it almost seems counterintuitive to think that, if prices were higher 6 months out or a year out, well, isn't that bullish for oil? Well, no, not necessarily, because then producers just hedge and then they deliver into those later months at those prices. So it oil performs the worst when it's in contango, and it tends to perform better in backwardation. And we're still in backwardation here, pretty strong backwardation. And to me, this looks like this might be the beginning of the move that we've been kind of anticipating a little bit. I'd sort of like to see it, at least on the September contract, maybe pull back around, I don't know, pull back around $82, $81 and test that last little, test that red line basically, maybe one more time, or maybe even below that red line a little bit. And, you know, just as a level of confidence, you know, because you get these, we've all seen it before, fake outs versus breakouts, you know. I like a setup where you get the breakout, you come back, you retest the key areas, and then you take off from there. That's kind of what I'm looking for. So
Yeah, same here.
any kind of retest, any kind of retracement and price action, I'm starting to shoot the gun here. But you know, that said, if we retest and we can't hold these levels, then we've got to reconsider, you know. I think it's so funny that we're still in backwardation, because I think part of well, we'll just call it Biden et al., because there's way more to it than just Joe Biden's strategies. But
Right.
you know, Department of Energy, you know, all the way to Jay Powell. Obviously, energy is such a key part of inflation that, you know, they drained the SPR, which is our Strategic Petroleum Reserve. I mean, they've been selling out of that thing for months now. Just basically, they've been trying to flood the market to sort of suppress the curve and get it back into contango. But they also came out and said that they're going to be buying oil back around, you know, $80 to refill the SPR. And I thought that was just hilarious, because smart traders out there, okay, they're going to look back on the curve and they're just going to buy further out on the curve. You know, you're basically putting a floor on your prices if you say that. You know what I mean? Because
Right.
you're saying the government's going to be a buyer at a certain price. Well, they were not successful in you know, inverting the curve to contango, because I believe mostly a bunch of smart money came in behind them and started buying those later contracts, you know, and it's just sort of evened itself out. And now you're seeing like the exhaustion from selling from the SPR, and the increase in demand. It's kind of getting to that weird inflection point where it might be backfiring on them a little bit here. And you know, we still have to kind of consider this recessionary backdrop. You know, it's a tough one to call here. You know, Darius Dale had some of the best analysis I've seen on it. You know,
Okay.
Eric Townsend was asking him if we've seen the big credit event yet that would mark maybe the bottom of it. And I think what he was referring to was a lot of the bank, you know, the Silicon Valley and all the banking
Right.
stuff.
Okay.
And Darius said, no, that is not the event that I believe. He says he thinks there's a big non-performing loan cycle coming shortly. And I guess if he's right about that, that will be sort of the event that probably takes us back down the total market. So you can't rule out the possibility that everything takes another double dip here.
Right.
And, you know, I tend to think that the overall market will do that, but kind of remains to be seen, you know. Maybe they were right about the soft landing.
Yeah,
But
it's possible. It is
regardless of,
yeah.
it's possible, we'll put it that way. Regardless of that scenario, it'll be really funny to see how crude reacts, because crude can sometimes be very idiosyncratic, meaning like, okay, the recession hasn't played out yet. You know, we go through this non-performing loan cycle. We go through all this commercial real estate blow up. We have some big credit event. We have some big, you know, flash crash or something happens. Like, crude should probably trade with the market if something like that were to happen.
Right.
But how we'll know this market is for real and that there's real structural problems with supply will be if crude keeps running up and that scenario happens. Any kind of idiosyncratic deviation from the macro market in oil is a sign that we're going to have another big spike, I think, which is also going to really play havoc with we've got inflation under control crowd. So
Right.
this is a very interesting time right now. We're still kind of watching. I'm buying here and there. I'm sticking with the BSM trade. It's been a good trade. If you want to kind of just dovetail into that real quick,
Yeah.
they
Let's talk
took a
about
little
some
whack
BSM.
on their
Yeah.
yeah, they kind of missed their earnings a little bit. I don't think like public company, I don't think the buy side, sell side, whatever, really knows how to model these companies very well.
Yes.
So, I'm not sure that, when they model their earnings per share, they really have any idea of how to do it for a company like this. Cause, this company's barely covered as is. And either way, the market didn't really like it, but um, went ex-dividend today. They declared a 10.66% annualized yield.
Not bad.
I'll take that all day.
Yeah, for sure.
um, their payout ratio is 75%, a little high, but it's really hard to gauge a company's payout ratio like Blackstone because you're going to have lumpy quarters,
Right.
because you're essentially a pass-through vehicle who has no control over the pace of new drilling and commodity prices and things like that. So lumpiness is part of it with these type of companies. And we're just kind of counting on their management to kind of play their cards right. And I think we're going to see some pretty good quarters coming up.
Yeah. So would you say that their closest comp publicly is VNOM? Because look like maybe their quarter Wall Street was more bullish on. Would you say that's our closest?
Yeah, yeah, yeah. There's a couple others too. Maybe Brigham might be a better one, and even I don't know, man. There's so many that have kind of gone public here lately.
Yeah.
Can't even keep up with them all.
Yeah,
Uh,
totally.
there's another one I was thinking of, Kimmeridge, but I'm not
Yeah.
sure. Kimmeridge is also an operator, so I'm not sure how their whole thing is tied together.
What
Um,
about and then there's like Permian PBT or something, Permian Basin Trust or
yeah, yeah. Um, I don't compare them to Blackstone because they're not multi-basin.
yeah.
By the way, I really don't like that stock either. It's a dog. It has the name Permian in it, but it has basically a bunch of acreage on what we call a central platform, which is not any of the sexy part of the Permian. It's not Wolfcampian. It's not Sprayberry. It's a shallow platform that they actually produce shallow oil from. I mean, the Clear Fork and some of those formations have done all right, but you know, it's nothing like the best areas in the Midland and Delaware Basin. So they're almost just trying to capitalize on a name and hoping that people don't look into what, and that is a problem with this space is
Yeah.
that people make a lot of assumptions that rock quality is the same everywhere. So you really have to dig into the assets and understand what they are.
Yeah. No, I think to take a step back real quick and just really frame maybe how somebody like Ryan can help, the viewership here potentially is like, you know, well, let's go back to that 10-year chart just to maybe even to really start high level. It's like, look, the 10 years potentially in the process of breaking out here. It's certainly, let's go look like if you really zoom out, it's already broken out. If you really
Sure.
going back to, we've been in ZERP for decades. And really since
Sure.
'08, we've been in this ZERP world. Maybe
Yeah.
we're leaving that world potentially, right? The price of oil kind of looks like maybe it agrees with that thesis. Like the price of oil could be leaving, the idea here is potentially we could be leaving this nice zone we've been in of, about uh, what, 50 to 75, $80 oil is pretty nice for the rest of the world. And if we were to go stay higher than that, energy products or the energy, the resource complex generally could be a very right place for investment. But
Yeah.
but there's a lot of crap too, like we've talked about on previous episodes, UNG and USO, and like those are, they don't serve a purpose, but they're certainly not the best places to allocate capital longer term. And then you've
Yeah.
got the operators, the royalty, but those guys are run by management teams, which sometimes are in the business of enriching themselves. And so,
Yes.
what
They
somebody
like to
like
shovel
mine,
it out the back door.
right, exactly. So that's really to your point, that those little nuggets about PBT PBT and BNOM and BSM, it's not. I think having humility with these markets is with experience comes humility, right? Like you think something, the markets will humble you many times. That said, it also seems like there could be some opportunities, some ripeness for some mispriced securities. I don't know. So blah blah
Yeah, I
blah.
agree with you there.
Yeah. So
Real quick, I'm gonna
yeah,
shoot
please.
you over just a quick chart of
Yeah.
USO overlaid against the 10-year,
Oh, that would be
just
cool.
how similar they
Yeah.
look.
Yeah.
And this is actually a good point you brought up, and something that I didn't really think about until you mentioned it. But coming out of COVID, oil really did kind of trade with the 10-year,
Yeah.
at least the yield. As the yield was
Yeah.
ripping higher, then so was oil.
Right.
And come on, computer, don't be slow.
Yeah.
My
But
wife
yeah.
says solar flares are knocking out our internet and phone capabilities right now.
God, these cable companies will come up with anything to just not give us what we need. Yeah. I'm not
Okay. Sorry.
No, it's all good.
It's coming.
But yeah, no.
Maybe.
Yeah, I could even pop it up on here
I think I
too,
got it.
potentially. So let's look at USO and then overlay some
Yeah, so I had all I had was the TNX,
okay.
um the TNX on the weekly chart overlaid with USO on the weekly chart.
Yeah, I love it. Let's do it. So here's this, and then let's add TNX weekly or US 10-year. There it is. So yeah. So oh yeah, look at that. We didn't barely have to adjust time period. And yeah, like you said, for a period of time here, these things were or go ahead, tell me. And these charts are always so funny when you're trying to adjust two charts to each other and keep the percentages the same. It gets weird, but clearly they were trading together for a period of time. But yeah,
Yeah, and they actually still are. I mean, if you look at that correlation, like,
yeah,
okay, it almost kind of coincides with, like, or at least the 10-year started sort of consolidating just the same way oil did. Kind of, well, I guess around, kind of towards the beginning of this year, kind of when everything started rallying. And I think, like all the strength we saw in the NASDAQ, and a lot of the run up we've had here lately come into this year is probably the idea that inflation is peaked and
right,
that yields are coming down. We've noticed the 10-year started consolidating, moving down. Oil started consolidating, moving down. And they're both kind of looking like they want to break out of that consolidation pattern. And that's a scary proposition for the market, the rest of the market, because what that might be is kind of a feedback loop. Like, okay, because the bond market is always smarter than the equity market. It's a much more pure market. So if, you know, if the bond market is sniffing out another big run in oil prices, then it's also going to sniff out the fact that the Fed's going to be in a precarious position, and that we may not have peaked on rates, and that rates may have to go higher.
Right.
And if you look at those charts over later, they almost look like they're both breaking out here. And that's kind of my interpretation right now, at least, is that, if energy rips, then yields are going to rip too, and it's going to cause a lot of havoc in cross-correlated assets. So this is something we should watch. I don't want to make too much of a prognostication here, but that's a very interesting correlation there. And those are the kinds of things that we try to, as macro guys, we try to marry all that when we're just, kind of the point of our Swami research is to help everybody manage on the day-to-day trading, and then kind of think about the bigger picture and how it all fits in.
That's right. That's right. And no, that's right. And I think, like, as of yesterday, this is today's report. You can get it for free. Go to swamiresearch.com and sign up for the daily ETF report. And, in yesterday's report, to your point, copper, the house ETF, which is like a residential housing ETF, which just trades with rates. IWZ Telecom trades with rates. MPW REIT trades with rates. REITs trades with rates. XLRE REIT trades with rates. Wheat commodity to some extent. Well, this is one doesn't fit like the others actually, but the point is that yields breaking out, duration sensitive equities breaking down, copper breaking down. I guess the copper one's kind of, to your point. Some of these. Well, here's what I'm trying to say. All those things breaking down on the same, or losing their trend on the same day, is interesting. Let's start there. Brazil is a, big commodity exporter, of course, steel, energy. So that's breaking out. So the point is that I just, to your point, it really, that is an interesting scenario, right? It's funny. FinTwit is such a cool little microcosm of the financial markets, because you get, so many participants that cross so many different, aspects of the financial markets. And what's interesting is the soft landing island. You had mentioned this. The soft landing island got very crowded, right? David Spring is his name, Andy Craig, I believe. He had some great points on this, but Andy Costigan, excuse me. But so soft landing island got very crowded. If people start leaving that island because inflation gets hot again, and to your point here, what are they going to do? Raise interest rates more? How does that doesn't fix anything, or it doesn't, it's not going to, it's not going to refill the SPR, and it's not going to.
And that's what I think. I think that's the point I was making about oil possibly being idiosyncratic coming up here.
Right.
Is because you cannot fix a supply side problem in the oil markets, which is what we have.
Right.
We've took the binky away for a long time now.
Yeah.
We just don't have the right grade of crude here. We're making enemies with a lot of our trading partners. We're not facilitating heavier blends coming from Canada and Mexico. And then on top of that, the Saudis have tacitly admitted that their spare capacity is not not much of anything.
Right.
At this point. So, the structural bull market in oil is going to come from the supply side, and just, raising rate does nothing to fix supply. If anything, it deprives capital to the sector.
Right.
So, that's the problem the Fed is going to run into, I think. And given the US's debt profile, like, well, what is their terminal rate anyway? I mean, how much, you know, what
It's
is it? 5%, 6%? What do they call it? R star?
yeah.
You know, it's
I
like,
considered changing my handle to R star equals 0. I think
yeah,
it's equal to the amount of game tape Johnny Manziel watched for the Cleveland Browns. 0.
there you go.
If you saw that
Yeah. And that's
documentary.
like,
Yeah.
yeah, oh, that was hilarious. I love
Yeah.
that, dude. And, but you know, that's kind of funny because I mean, what is our star with
Yeah.
our debt load and
Yeah.
our tax receipts the way they are? I
Right.
mean, our star's like 1%, if not NERP.
Yeah.
So, I mean, we cannot afford as a country, we just cannot afford the 10-year to be sitting at 6 or 7%, you know?
Right.
Like we just can't finance that.
Right. And if we can,
Uh,
and if we can, so okay, and I thought this through in the White Walk. And again, no, we're not here to necessarily forecast interest rates. That's gone horribly. But to your point, even if we can, what's that do to the dollar? Like if the United States can support 6% interest rates, well, the world, Europe can't, Japan can't, nobody else can. Money
oh
is going to
no,
flood into the dollar like it never had. And now you have, just like 2022, you have this like dollar wrecking ball scenario potentially. So it's
yeah.
interesting to tie it back to energy quickly. What's so interesting is that let's jump to here real quick. So this is 1 month price performance of the stock market, the S&P. And what I notice is we've had some rotation. If you've not been paying attention if you just, check back in after being gone for a month, you'd be like, oh, wait a second, Tesla can go down. I didn't know that. That's interesting because year to date, it's only gone up. And
Sure.
where is the strength? Where, as the 10-year creeps back up towards 4.25, where everybody died back in October, healthcare is working, but nothing. But in consumer staple or consumer defensive, healthcare and energy are working. Other stuff isn't. Last sentence on that. What's really interesting though, and when you're considering the addition of energy to your portfolio, is there's a scenario, unfortunately, right? This isn't necessarily a good thing, but it's like there's a scenario where we wake up tomorrow and energy prices are 20, 30, 40% higher. Maybe. I mean, if something crazy happens, you can't say that about your Procter and Gamble stock, right? Like you're not going to
No,
raise
exactly.
bed
And it's
sheet
like,
pricing. Yeah.
yeah, exactly. I'm just trying to pick one here just to illustrate a point.
Yeah.
Um, oh man, there's lots of good ones.
So it almost deserves an
Um,
allocation just from that negative
yeah, like
correlation. Kind of, yeah. Go ahead.
what's a yeah, I'm trying to find something that makes sense here.
Yeah.
We'll just use the AI vanguard of Microsoft, you know?
Okay.
I mean, sure, yes, people use Microsoft products all day, every day.
Yeah.
Like Chat GPT,
Right.
great. It's cool. I'm trying to
Yeah.
learn how to use it.
Yeah. It's cool. Yeah.
I mean, I get it all, you know, but
Sure.
the point is that you own all this stuff in your portfolio. Like you pay to use Microsoft products anyway. You know, yeah, maybe you own the stock and like, but it's a one-way trade, right? It's like you're paying them as a corporation and you're betting on that corporation to do better. In life, you have to drive your car, you have to get on a plane for business, you have to heat your home, you have reliance on shipping and other, hydrocarbon related businesses. Like, so it's almost owning an allocation to energy is almost like it's like a life hedge, I
Dude.
mean,
Yeah.
these are things that you have to like account for in your personal spending.
You're
So
almost you're naturally walking around short energy, basically, is a way to
yeah,
say it,
you are.
right?
You
In
are
a way.
that is yeah, you are you're like what's the best way to put it? Like if you're a I might have to delete this part out. I'll just have a
That's cool, man.
complete thought process.
Nah,
But
it's a long
I was trying to
process.
think of what they call it, like when you basically when you're short, is your short gamma pretty much, right? Like
Yeah,
if you're selling an option, you're short gamma.
yeah, yeah. You're like negatively convex to, I mean, to like,
Yeah,
that's,
exactly. So
yeah,
it's the same. You're like, yeah, you have negative convexity to energy in your life.
yeah,
You're short the gamma trade on it just by you
right,
getting in your car and driving to work every day, you know? And so like when we talk about investing in this kind of stuff, there is implications beyond just, oh, I like this company. Oh, I want to, like these are real, these are kind of like mind-bending thought processes that go into this stuff. And you know, it's kind of fascinating in a way that we can invest in something like a public equity and it can hedge our cost of living, and there's
right,
very few sectors that have that sort of convexity proposition to them.
right, right. No, that I think the picture you really did a good job of painting, or what's really interesting when we're thinking about it is like Tesla, right? The big red one in the middle there. It's like so many people that own the stock own the car, right? They're like they're into it and they're into the brand and like it's fun and it's exciting. Like yeah, buying Shell where you like go to the Shell station, put the pump in your car, it's not exciting. It's not, you don't feel, maybe you don't, maybe it doesn't inspire you, but like it, but but to your point, like you're not short Tesla if you don't have a Tesla. Like that you're
Right.
not going to,
Yeah.
it's a nice car, it's a great car, but it doesn't mean
Yeah.
that, yeah, I guess, you said it better, but the point is that, and especially if the world goes to needs meaning more than wants, right? So back to the chart here. I mean, here's the chart that I think sums up the year best, right? So here's VTV, VUG.
Hmm.
Like here's here's the year to here's Jan 1. Remember everything changed Jan 1, 2022, right? Stocks started going down. Well, in Jan 1, 2023, growth started going, there's this growth rotation. And then that rotation really had this big red bar that last week of July, or excuse me,
Yeah.
middle of July, the week of July 17th. And the market started rotating back towards value since. Um,
Yep.
and so, I mean, this is the get long wants. This is get long needs. Maybe, I don't know.
Yeah. Just to real quick summarize, this kind of goes back to something me and you have been talking about for over a year. Was like
Yeah.
when we did bottom in rates and we were coming out of all that, and the yield started ripping.
Yeah.
A lot of this is just the markets. It's so confusing because people are unwinding, the 60/40 type portfolios, and it just plays havoc with the
Yeah.
market like this because they don't understand the rotations, and it's like they're scrambling because the money's coming out of bonds, like the $7 trillion worth of bond money that was out there a lot of it was liquidated and it had to find a home.
Could
And
be. Yeah.
so it kind of it creates a lot of confusion in the equity market, I think, because you get guys that try to rotate, okay, well, now maybe it's time for value to finally work. And then,
Right.
Value falls off the chart. Well, it's back to tech again,
Yeah.
and these are the kind of like weird reverberations that I was kind of expecting coming out of COVID.
Right.
And it kind of comes back to like volatility capture, it's a good strategy. Don't ask me how to execute it. Call Chris Cole, call, Louis Gabby, whatever his name is over there in Spain. Those guys are
Yeah.
like experts
Yeah.
at that kind of thing. But
Yeah.
um, it's we're definitely in we're definitely in a kind of uncharted territory here, I think.
Yeah. No, I mean, this chart maybe says it pretty well. This is SPY versus TLT. And yeah, to your point, like, I mean, think of, I guess here's a closing thought for the viewers is like, on my end, is like, yeah, to your point about 60-40 or, this balanced allocation, it's coming unglued. I mean, is this going to keep going? Like, if you look at the relationship between SPY and TLT, uh, TLT is just relatively gotten annihilated, and at some point here, does it start acting like a hedge, or why? I'm paying you to run my money, let's say, and you're charging me a fee to lose money every month when I could just be parking this money in a freaking CD and get 5.25%. Like, tell me
Yeah.
again why I'm doing that, because
Well,
it doesn't make sense when I say it out loud. And to your point,
in
it could
all
have big
honesty,
allocations or big allocation
yeah,
implications. Yeah, go ahead.
in all honesty, this should have happened 15 years ago. Like we should have normalized rates at around this level because
Right.
there is there's a big time need, especially for older people, to have yield safety, right? Like
Right.
you should be able to invest in PLT or you should be able to buy the 10-year bond and at least outpace inflation or at least keep up with inflation. Like if yields were to hit like 6 or 7%, they would have to issue so many treasuries because everybody would want to buy that for yield, which
Right.
should have existed in the first place. People have only been in bonds for 40 years because yields have dropped and they've been in it for capital appreciation.
Right.
Like if we'd have put a stop to this earlier on and had a sort of normalized market where you could still invest in bonds for yield, then we'd be great. But the problem is we got too much damn debt now. And you can't let the rates stay this high because the US will be insolvent. Either that or we'll destroy our currency trying to print our way out of financing it. So that's the catch-22. And I know that's not lost on old JP up there.
Rum.
And I don't, I don't envy his job at all.
No. Yeah, I'd take his yeah. I'd take
I
his
take his salary, but not his job.
yeah. Yeah, exactly. Especially his net worth. I'd take that. I don't know. I don't know what he gets paid, but probably
Yeah.
not enough for what the sleepless nights. But the man
I'm
is
sure he's made his money in the private market.
oh yeah. No. Yeah,
Hey, real
he works
quick,
with
let's
hard a
touch
lot
on
of
this.
things.
Yeah.
Yeah.
Let's touch on this Twitter thread
Yeah, you
you were
got just a
talking
quick minute
about.
before I get you out of here? You cool?
Yeah, just real quick, just because it's
Yeah.
funny.
Yeah, this was a reply, or excuse me, it was a reply by me to our so BSM, like we talked about, we had a great up on a rope. I think we lost 5 of that 14% yesterday, but we're getting double that in the dividend, so no problem.
Yeah,
And
no
yeah,
worries.
the stock has been a monster. Great pick by Ryan, and such a cool. Really, it was a fun case study to go through something and understand a royalty co. Something that I never even looked at it at all until I met Ryan. So very interesting. This thread, I said, what other royalty companies can we talk about? Great tweet by Hunter NYC. This guy's good. He's good follow for you real estate nerds and real asset fans, I should say, since we're on Real Assets Weekly. What's the most esoteric?
I'm following him now.
Yeah. Great follow. What's the most esoteric,
Hi,
unusual,
Hunter.
or oldest fan of the show, I'm sure, royalty stream you've ever heard of? So yeah, as our resident royalty specialist, take it from here. What do you think? There's some cool ones on here, huh?
Yeah, there
Red
was, and
carpets.
there's some good examples, but I just this one killed me, and I didn't even catch it until you brought it up. But somebody replied, Bobby Bonilla. And I did not know what you meant by that, and then you reminded me that
Yeah.
give me the details on it. The Mets, basically, what happened there?
I forgot the deal, but they gave him like a half billy or something, and like whatever. whatever year he peaked, they gave him like a ton of money, and he still collects a crazy like it's a decent single digit percentage of like Mets payroll is Bobby Bonilla to this day, is my understanding. So that
Okay,
is
yeah, here I got it here. As part of a deferred salary arrangement, the New York Mets have paid Bonilla a little bit more than 1.19 million on each July 1st since 2011. The annual payments will continue until 2035. Bonilla is now 60. He'll be 72 when the payments end.
wow, what a dream, man! What a dream.
Yeah. So
But
when me and Turtle go put together our private royalty fund, the first thing we're gonna do is well, probably not fly our private jet unless a hunter in NYC is gonna lease it to us.
issue some
And then
perps, perpetual.
we're gonna go to Bobby's house. We're gonna buy 10% of his royalty stream and stuff it
Yeah,
in our portfolio.
there you go. I love that. Yeah, he might need some. Who knows? He might need some quick cash. Arian Foster, we could try too. The
All right, I like it.
now these there's an
Down
NBA.
here in H Town. He's an H Town boy. He's close to home.
Oh, that's right. Yeah, he's actually from San Diego originally, but that's right.
Oh,
But he did peak for the Texans. The another one that was
good.
cool. There's like a Dutch water bond that's been paying for 300 something years. We've got maybe the cool one that you could talk about a little bit briefly. Get you out of here, but you know, nothing cooler than just people that haven't been to downtown LA. It's interesting that there's some, even in the most dense parts of downtown LA, there's just these strong historical. There's some wells in very urban
Yeah,
parts of LA, so that's kind of interesting.
yeah. I mean, I actually, before I knew a single thing about the oil and gas business, I remember being about 16 years old and going to Huntington Beach to compete in a surf contest, and I came in from lost my heat, threw a little fit, was wandering around looking for this place called TK Burger, which is just this fabulous little burger joint in South Huntington Beach. And I'm
Yeah.
like, can't find it. Like, I'm in my wetsuit and I'm like walking around this back alley and there's like a pump jack back there. And I'm like, what the hell is this? And
Yeah.
like, yeah, so like LA is sitting on top of a massive deposit, and
Yeah.
there's been so much historical production and the city's grown up around it. And it's like they can't bust these people's leases. So you just like see these like random like old school pump jacks in alleyways and like middle of LA or like it's pretty wild, man. I've never seen anything like that in my life. But
Dude, that is hilarious. Yeah,
uh
the La Brea sand tar pits. That makes sense. I mean, I didn't even put that two and two together, but I guess that's the tar is
yeah,
some sort of carbon resource, I guess. So yeah,
sure,
fascinating,
yeah.
man. Royalty
Like
royalties are such a fascinating thing to me. There's a lady collecting Civil War pension until a few years back. I mean, there's no better royalty than just a pension. I think that's the best royalty
yeah,
if you
no
consider
kidding.
that a royalty. Um,
Well,
yeah,
yeah, if you don't consider it a Ponzi scheme, then
yeah.
we'll
There's
see.
that. There's that. What else, my man?
Uh
I want to get you out of here before I know you guys have to do some.
yeah.
What else?
Yeah, not a whole lot, brother. We'll be checking in. Just kind of, you know, grinding out the business, getting a feel for you know, just kind of taking the temp on my clients and seeing where they're spending their money and kind of watching the tape every day and coaching baseball, coaching surfing, trying to compete in fishing tournaments, trying to do a lot more than I should, but you only live one life.
Oh man, the president and CEO of Pescadero Land Resources. Uh, that's right. I said it right. Pescadero Land Resources.
Yeah. And
Something like that.
now energy sector head at Swami Research. I
That's
added that
right.
to my LinkedIn profile for you.
That's right. Start with that probably. And yeah, man, it's been an absolute pleasure. Happy Friday. We're working on some cool stuff for you. Ping Ryan but feel free to reply to the video with royalty, oil and gas, resource, all kinds of minerals, all kinds of minerals, right? That are turned into royalties in this country. It's not just oil and gas. And so
Absolutely. I'd be happy to, like I do some consulting, some mineral management, but I'm happy to answer people's questions, I I try to be informative for people and help them understand, the mineral estate and what to make of it. And it confuses a lot of people. So Andrew, leave some contact information, and anybody watching this has any questions, reach out to me, and I'll be happy to help.
the man, the myth, the legend, Ryan Cobb. Thank you, sir. Thanks for watching Swami
Yeah.
Research, Real Assets Weekly, episode 12. Have a great rest of your Friday.